talk to God.
No, it's talking to God for us now.
All right, let's bow our heads in prayer.
Beg your pardon?
Sorry, Minister. Madam Chair, I think we have to formally approve the appointment of the chairman, yes.
Much, Leader. It's just that I felt so badly that the team from the bank has been sitting there and I rushed ahead. May we have, our House Leader is here, so we're good. Welcome. There's no need to vote at all because saved in the nick of time. Minister Clark for prayers.
Let us pray. Heavenly Father, thank you for the vibrant democracy that Jamaica enjoys. Lord, we ask you to be with us this afternoon as we gather to hear from the Bank of Jamaica in this historic occasion their responsibility for monetary policy and meeting inflation targets is a serious one, and we pray for wisdom in today's interactions, and that we all act and speak with the best interests of all Jamaicans in mind. Thank you. In your name we pray. Amen.
Thank you very much. Let me first of all welcome the Governor of the Bank of Jamaica and all his members here, and the members of the House who are with us now to this Standing Finance Committee meeting, which is indeed a historic meeting. The Governor will, for the very, very first time here, answer questions relating to the Bank of Jamaica's monetary policy report on the period from July to September 2021. There is, in fact, no precedent in Jamaica, and it is a direct consequence of the recent modernization of the Bank of Jamaica through the passage of the Bank of Jamaica Amendment Act that was passed earlier this year in the House. The Act, as it was passed, clarifies the mandate of the inflation target as it relates to the inflation target set by the Minister of Finance, and it establishes a monetary policy committee of the Bank of Jamaica, which is chaired by the governor himself, and it empowers them to make monetary policy decisions calibrated to achieve the inflation targets. The Act goes on to deepen transparency, requiring that the Bank of Jamaica publishes the minutes of its monetary policy committee meetings and issues quarterly reports on the monetary policy, and those reports will be tabled in the House twice per year. The Act, which is very important for us in Jamaica as we move forward, has for the first time become very accountable to this very House. And the first time, again, I say, in our history, becomes accountable to the Parliament with respect to the achievements of its targets and its objectives. And so it is for this very reason that the Governor of the Bank of Jamaica is here with us this afternoon, and hence our very warm welcome, although our late start, Governor. Going forward, as I said, this will be done twice per year. This afternoon, I thought of saying we have a very tight space of 1 hour. We're going to get slimmer because I'm still holding us to an hour because we do need the hour. So we're starting at 1:35, which means we are obliged to go to 2:35 because it is important and it is historic, and I think it's important that the nation knows what is happening in this regard. And against all of this, the backdrop, of course, is the COVID-19 pandemic, which has disrupted supply chains all over the world. And here in Jamaica, we are, of course, no exception. Among other things, we all know that Jamaicans are very anxious to know what is the Bank of Jamaica's view as it relates to inflation and how it plans to get inflation back in line with its original targets. I want us, therefore, members, to use this time that we have very wisely for the benefit of all of Jamaica, the people we represent. I ask that we are respectful to each other and to the governor when questions are asked. And as a chairman, I'm asking, this is not the time for speeches, this is a time to ask questions. So I'm not going to allow anybody to deliver a speech here this evening. We're just going to allow the governor to give us a brief overview of the reports for about 5 minutes, and then I will invite the Minister of Finance, Dr. Nigel Clark, to open with questions, and followed by the opposition spokesperson, Mr. Julian Robinson, on finance. And thereafter, I will field questions from members as you show an interest in asking questions. So without further ado, I'm going to...
Madam Chair, could I just make a point?
Sure.
I think this matter is too important for it to be confined to an hour, and I would strongly recommend going forward that we give sufficient time. It is historic that the BOJ is here, but the matters that we're discussing are very serious, weighty matters, and I will work with the 1 hour today, but I'm really not comfortable with us just having a 1 hour meeting for something that is as substantive as this.
I thank you very much, and I'm glad you have made the point. We do feel so too, and we wish, as members of Parliament, we had been earlier, but I'm not going to say any further because it's important that we go right ahead. I think the point is well taken. It is important that these matters are aired fairly. So, Governor, over to you.
Madam Chair, just want 2 other points. Is there a report?
There are 2 reports that are here. There is volume 21, number 4, which is the report from May 2020, and there is a report numbered 1, volume 22, for August 2021.
So those are what we are reviewing now in December.
Yes, and it is historic. Yeah. We wanted to move ahead with it, and I'm sure the governor will give us an overview, and there will be enough meat in what he says to stir the questions and the anxieties.
Yeah, it's just an important procedural issue as to what we're here to deliberate, because it wasn't clear to me.
It's the reports that happened.
The other point I want to make...
Sorry, just if I may, the reports were tabled in the House.
Already.
Several weeks ago.
Yeah, long ago.
Yeah. But they're available online. A link can be distributed.
If I might help you, they were tabled on the 21st of September. For all members of this.
Months ago.
So the reports were tabled, and they
Madam Speaker,
yes.
if I may, I would wish, with your permission, to ask the Minister of Finance to indicate how we will proceed from here.
I think what is happening is that we'll allow the governor to open with questions. I'm going to allow the Minister of Finance to field the first questions, and then the opposition spokesperson on finance, Mr. Robinson, to field questions. Thereafter, members who show a desire to ask a question will do that, and then the report will be considered and approval sought.
And Madam Speaker, the other point I want to make related to the notice of this particular sitting. I feel, given that it was the first time we were doing this, and it ought to have been brought to our attention in a more forcible way what was happening today at 1. I only learned. Sorry, ma'am.
I want to take issue. Hold on. I want to take issue with that because this whole issue has been before the Parliament for weeks and weeks.
What issue?
I
What
know,
issue?
yes, and it was announced last week when we were in Parliament that the governor of the Bank of Jamaica would be here for this meeting. So we might have missed it, but I want to say that the Minister of Finance has placed the government, the Parliament, the clerk has placed a lot of importance on this meeting, and members have been alerted to it. Albeit it's a particular time of the year, whereas members of the Parliament, our hands are filled in all directions, but let it not be said that importance was not placed on this.
No one is saying that. I'm suggesting that the notices that are sent out by Parliament, by email, could have kind of highlighted it a bit more, because
I don't want to waste the precious time that the governor has for this.
No, I'm just putting on record,
I really do believe I really do believe something as important as our monetary policy and inflation and what is taking place should be forefront for us. And this is why we say all the time, don't just say A to whatever goes on in Parliament. Don't go out and talk. Don't go down and have lunch. Let us sit and pay attention to what is happening. And I crave your indulgence to allow the governor, who has been here for a little while, to open for us. Thank you so much. Governor?
Good afternoon, Madam Speaker.
Opposition Leader, just before you begin, I'm not sure if you were in the House last week at the point in time. I can't recall seeing you. I would have been Speaker at the time. The Leader of Government Business actually reiterated twice, asked everybody to be here sharply at 1. Finance Minister would have asked persons to come earlier at 12 if possible, because it was critical. I remember opposition Leader of Business actually asking again what was the purpose and why the entire House was needed. So somehow it may have been lost in translation, but confirmation was made and every effort was made to ensure that the entire House was aware and present today.
Of course, not everybody was present when that was happening. I'm just saying normally notices are sent out by Parliament, and the notification of this particular meeting
and the timetable, remember the timetable also goes out via email.
Prominent. That's all I'm saying. Sorry, Governor.
So I'm going to ask us to be members, I'm going to ask us to be respectful and to allow the governor to proceed. Governor?
Good afternoon, Madam Speaker, Madam Chairperson, ladies and gentlemen. I'm accompanied here today by 3 of my BOJ colleagues, Dr. Wayne Robinson, who is a Senior Deputy Governor, Mr. Robert Stennett, who is a Deputy Governor with responsibility for monetary policy, and Ms. Carrie Ann Williams, who is a Division Chief with responsibility for monetary policy formulation. It is a pleasure for me to be invited here to participate in this inaugural meeting of the Standing Finance Committee on the bank's price stability mandate. As per the requirements of Section 34FG of the Bank of Jamaica Amendment Act, I submitted to the Minister a report on the bank's performance with respect to monetary policy and its inflation target in early September 2021. The report and the 2 attachments that accompanied it highlighted the major economic developments in Jamaica and the bank's performance for the first half of 2021. My brief remarks here this afternoon will therefore be focused on the bank's updated view of the outlook for the Jamaican economy, as well as our recent monetary policy decisions. After these brief remarks, I would ask the Parliament Committee to allow Ms. Williams to make a brief presentation on inflation and monetary policy. And I think you'll find it very informative, Madam Chair. By way of context for my remarks, it is important to note that the macroeconomic outlook for the Jamaican economy remains generally positive following a sharp contraction in economic activity in financial year 2020-21 because of the COVID-19 pandemic. The local third wave of the COVID-19 pandemic appears to be receding, and with it, some of the government-mandated restrictions. These developments happily support increased economic activity, which already is showing some strong positive signals in the form of rising employment levels, buoyant inflows into the foreign exchange market, and strong reserves. There are, however, concerns that new variants of the COVID-19 virus and a fourth wave could hamper economic recovery. BOJ's latest assessment is that GDP growth for financial year 21-22 will still fall in a range of 7% to 10%, but the risk to the outlook is skewed to the downside. Our forecasts also indicate that GDP growth will moderate to the range of about 2 to 4% for financial year 2022-23. BOJ's main concern, however, has been a recent inflation performance and inflation outlook. As you are aware, between August and October 2021, inflation has trended above the upper limit of the bank's 4 to 6% target range. The primary reason for the higher inflation has been large increases in international commodity and shipping prices. While BOJ has no control over these external prices, the bank has some control over the second-round effects of these increases and has implemented a suite of policy measures aimed at managing inflation expectations and returning inflation to the target in the shortest possible time. These policy actions include: 1, increases in the bank's policy rate from the record low of 0.5% to its current level of 2%. 2, measures to contain Jamaica dollar liquidity expansion. 3, while not targeting a specific rate, the bank seeks to ensure that movements in the exchange rate do not threaten the inflation target. The bank is also prepared to consider further increases in the policy rate and could intensify the accompanying measures at subsequent policy meetings. The bank's policy actions have been designed to limit the second-round effects of the shocks and to guide inflation back within the target range over the next 2 years. These measures will cause market-based interest rates to rise, which will make savings more attractive relative to spending and borrowing in Jamaican dollars more expensive. These measures are intended to temper the demand for foreign currency and moderate the pace of depreciation in the exchange rate. They will also reduce demand in the economy, and with it, the ability of businesses to pass on price increases to consumers. The suites of actions were, however, calibrated to ensure that the impact on GDP growth is minimized. In any event, at current levels, the real rate of interest attached to Bank of Jamaica's policy instrument is still negative. That is to say, at 2%, the interest paid to deposit-taking institutions by BOJ is still far below actual inflation and therefore still supportive of GDP growth, in that DTIs would much rather lend than leave their funds with the Bank of Jamaica. Members, I assure you that the Bank of Jamaica will continue to closely monitor the economic environment each month, and we are prepared to take further actions to ensure that inflation returns to the target range. Our actions are designed to protect the welfare of all 3 million Jamaicans and not just that of any particular interest group or sector. Thank you, and if you don't mind, I'd ask Ms. Williams to go through the presentation.
All right, thank you. Thank you so much, Governor. So, Mr. just get started. The presentation is termed Inflation and Monetary Policy. And the roadmap for today, we'll first discuss the factors impacting inflation for 21-22 and beyond, with a focus on the role of imported inflation and other shocks. Secondly, we'll provide a brief description of the monetary transmission mechanism, focusing on how the bank makes decisions, the impact of these decisions on growth and inflation, and how long it takes for these policy actions to impact inflation. We'll conclude with a brief summary of BOJ's recent monetary policy actions. All right, so in terms of the factors driving inflation, the key question is, what determines inflation in Jamaica? What influences inflation? Our research shows that the key determinants are people's expectations, fundamentals such as demand conditions, the international price of imported goods, and the exchange rate. Of course, as a small open economy, we also have to contend with shocks. It is important to note that this is a dynamic process, so changes in fundamentals and shocks can feed back into expectations and magnify the impact of these changes. And if we want to be very clear, we define shocks as temporary deviations of fundamentals from their underlying trends. All right, so what are the factors that have been driving inflation as at October 2021? So we note that the Statistical Institute of Jamaica would have indicated that consumer prices rose by 8.5% in October relative to the comparable period in 2020. The bank would have used a counterfactual approach where we are able to disaggregate the key factors driving inflation, and the pie chart that you're seeing pretty much does that and shows you the key factors. We estimate that approximately 44%, which is this area here, was driven and due to shocks. The key shocks being the lagged impact of international commodity prices. This is grains, oil, LNG, which contributed 18% to the overall figure. There were additional shocks to rental rates, which increased by 11.8% as of October 2021 and contributed 15% to overall inflation. With regard to transport fares, recall the rates for route taxis, hackney carriages, and rural stage carriages would have been increased by 15% effective Monday, August 16, 2021. And so you should be seeing that in this area here, the contribution of that regulated price adjustment. All these changes and the shocks that we're identifying has implications for inflation expectations and consequently the forecasted path for inflation over the next 8 quarters. Right, so let us focus then on inflation expectations. We note that expectations have been the key driver of inflation, and so we get asked the question, what exactly is inflation expectations? This refers to the rate at which people, as consumers, businesses, investors, all of us, expect prices to rise in the future, right? And the idea here is that this expectation can become self-fulfilling. We just have a diagram here that explains or shows the transmission of expectations to inflation. And the key thing to note is that as expectations rise, which we identify expectations to be rising from sources such as shocks, shifts in fundamental factors, those aspects will drive increased inflation expectations, which results in firms increasing prices to recover, right? After you have the labor market responding in terms of higher wage demands. That all feeds back into inflation being higher, which impacts expectations again. So this is a key issue in terms of the fact that heightened inflation expectations actually feeds back into inflation and becomes a self-fulfilling prophecy. All right, so how do we actually measure inflation expectations? We have two key methods being deployed at this time at Bank of Jamaica: direct surveys and yield curve analysis. And with regard to direct surveys, currently, Bank of Jamaica will contract the Statistical Institute to do an inflation expectation survey of businesses. Approximately 300 businesses are surveyed 8 times per year. Respondents in the sample, they are asked their view on inflation a year into the future. And the respondents that we target are managers, CEOs, financial controllers across various industries. All right, so turning to yield curve analysis. Typically, when we observe and analyze the yield curve, when inflation expectations change, nominal interest rates will tend to adjust and may result in shifts in the slope, shape, and level of the yield curve. So it is with that we estimate the effect of inflation expectations. In terms of future work, so I would have just stated that the bank currently surveys businesses. We intend to survey the expectations of consumers, as their views may impact wage demands. It also could impact consumption patterns, which impacts inflation ultimately. Okay, so let's look at what our survey-based measure of inflation expectations would have stated in our last survey. So as stated, we do it 8 times per year. In our October survey, we saw that businesses expected inflation to be at 8.2% 1 year into the future. And when we survey these businesses and ask them what are the fundamental factors that drive their expectations, they signal that changes in the exchange rate is a key driver of inflation expectations, as well as the external price of imported goods. And these are the 2 most important determinants of their expectations. So in our next slide, we're going to show some evidence of the impact of high inflation expectations on the price setting process. On the left, you have a table of the breakout of inflation as at October 2021. And what it shows is that there has been above target inflation evident in some key divisions, right, of the CPI basket. There is also evidence of second round impacts of shocks to the fundamentals, particularly in services such as restaurants and accommodation, and interestingly, rentals for housing. In particular, when we focus on rentals for housing, which has gone up by 11.8% relative to the comparable period of last year, it can, in some instances, reflect the second round impact of higher construction inputs on refurbishing costs. That's one hypothesis. But the overall rise in this category is a bit concerning and may reflect early signs of heightened expectations on price setting process. We're also noticing that at this point, we're seeing the direct effect of the rise in transport costs, roughly 13.5% in a year-over-year change as of October 2021. And this could exacerbate second-round effects as the effect of higher transport permeates throughout the CPI basket. All right, so let's turn quickly to our inflation outlook. And we just have a chart here on your left again that shows the monthly breakout of our inflation profile going out to September 2023. It depicts our monthly path, as I said, over the next 2 years. We have disaggregated inflation into 5 factors, namely agriculture, which is self-explanatory, processed foods, that's the items such as baked products, meat, to name a few. We have energy and transport, which includes electricity rates, transport fares. We also have services, other services such as meals consumed away from homes. This is your restaurants and accommodation, education and rent. And finally, we have the cost of durable goods, such as furnishings and appliances. It is clear that the shocks just mentioned will have varying impacts across all these selected categories as shown. You can see then from the chart that inflation has risen above target since August 2021, And the most recent outturn of 8.5% as at October 2021 is above target as well. The forecast is for inflation to converge to the midpoint starting in September 2022. So you see we're back within the target range. That is the baseline projection. And it is supported by a reduction in monetary accommodation, a deceleration in imported inflation, and contained inflation expectations. There are risks to this profile which could cause inflation to deviate from this path. These include higher second-round effects, as mentioned earlier, of international commodity prices and shipping costs, higher than forecasted inflation expectations, which could impact price-setting behavior, and higher U.S. inflation. On the downside, weaker than anticipated domestic demand and lower energy prices could constrain inflation. All right, so let's look at the Bank of Jamaica's role in targeting inflation. So how does the bank make a decision? We use a structured forecast and policy assessment system. It is done 8 times per year. It involves 4 comprehensive assessments of the economy, right? And by comprehensive, we mean that we forecast and prepare projections for the international economy, fiscal accounts, balance of payments, credit, interest rates, GDP prices. And this means that our baseline forecast has built into it projections for the U.S. economy, U.S. inflation, the Fed rate, response of international commodity prices. All of this is built into our forecast. It has feedback loops into our projections for the domestic economy, resulting in a consistent macroeconomic outlook for inflation, conditional on optimal monetary policy. This baseline forecast is complemented by 4 risk assessments each year. The key takeaway from this slide is that a monetary policy decision is always taken to impact inflation not now, but at some time in the future, hence why we call it a forecast and policy assessment system. The staff at Bank of Jamaica is looking out 2 years into the future, given the lags in the time between a policy action is taken and its maximum impact on inflation. Right, so this chart pretty much shows you how changes in the policy rate typically impact inflation. And we just want to focus a bit on it. You can see a diagram here that shows the key channels through which changes in the policy rate will impact inflation. The signal rate that we're talking about technically here is the interest rate offered on 2 deposit-taking institutions on current account placements with Bank of Jamaica. So the key channels through which a change in the interest rate will impact inflation are the exchange rate channel, right? The credit channel, which is towards the top end of the graph, and expectations, which is towards the bottom end. And as I said before, each node is showing how it actually peters through to impact inflation. So let's start with the credit channel, which is really towards the top end of this graph. From the perspective of a firm, a rise in the policy rate, so this is where the signal rate gets adjusted, will have, first off, a rise in what we call our treasury bill rate will subsequently rise, and other market rates will also rise. And what this does is it makes savings more attractive, and it makes borrowing more expensive. As savings increase and borrowings fall, domestic demand, which is where we have this node here, is constrained or it declines, right? In other words, a firm responds to lower spending by their households by reducing their expenditure on some key inputs like labor and capital, and this leads to lower inflationary pressures from these sources. So that's kind of trying to explain what we mean by domestic demand would be constrained by higher market rates. The other issue is that higher market rates also induce savings and it reduces spending in the economy. Once spending in the economy is reduced, the ability of producers to pass on price changes actually becomes limited. Right? So that's pretty much explaining how higher market rates induces savings, reduces spending and investment, constrains domestic demand, and reduces domestic inflationary pressure. The other channel is the exchange rate channel. And what happens here is an increase in interest rates, market rates, feeds into Jamaica dollar instruments becoming more attractive, thereby tempering potential conversions from Jamaican dollars to other foreign securities. This reduces the imported price of goods and services, right? So has a direct impact on how much is spent, the price of imported goods and services, and this thereby reduces the overall inflation. The expectations channel is very direct. You can see it doesn't have any intervening notes, pretty much a signal from the central bank in highly credible economies results in an almost direct impact on inflation through indexation. Putting the channels together, increased interest rates will temper demand, moderate the pace of depreciation, and influence in expectations, resulting in lower inflation. Just to state that for this entire process to work through, our current estimate is that it takes 4 to 5 quarters. All right, so we're about to conclude in terms of our recent policy actions, which have been already discussed. Just to state that this is the first in 13 years for us to raise interest rates, and despite this, our real interest rates, as you can see here, have been very accommodative. And we just show you how we calculate the real interest rate here. All right, so in conclusion, low and stable inflation is an important prerequisite for growth and development in Jamaica. We know that there is a short-term trade-off in terms of the impact on growth, but low and stable inflation, as we have stated, is a prerequisite for long-run sustainable growth. Therefore, the bank is intentionally adjusting policy to keep inflation low, stable, and predictable. Can't state that too much. And while we note that this will have negative implications for some, it will redound to the welfare of all Jamaicans. So that's it. Thank you.
Very well.
Madam Speaker.
Thank you very much, Governor and team. I'm now going to invite Dr. Nigel Clark to field the first question, and right after Mr. Robinson.
Thank you, Chair. And welcome, Governor, for this historic occasion before the Standing Finance Committee. Nobody wants inflation to go back to where it was several years ago in the high teens and very high and sustained over a long period of time. However, you have pointed out certain risks to your inflation outlook. LNG prices, oil prices, grain prices, US GDP. None of those are in your control. So can you sort of explain how your increases in interest rates are going to have the desired effect if the factors that account for inflation here are not in our control? And the second part of that is, if it takes 4 or 5 quarters for your actions to take impact, and we consider these impacts to be transitory, which you have said in your presentation by September it should be moderated, why is it necessary to take action now if it will moderate itself in 4 quarters? And then the final part of it is, can you talk about the risk if you do not act as you see it? If you don't act now, what risks would we be accepting, and how you balance those two?
Thank you, Minister. I think the big question is this issue of expectations. Because when prices are a fact, that is, goods are landed on our shores and they are more expensive, there's nothing anyone can do about that. But it's the expectation that the next set of goods that are coming on our shore will be much higher. The expectation that the exchange rate that you will have to buy foreign currency to pay for those goods will be much higher. The expectation that you have to defend yourself, that is, say you're negotiating at wages or you're setting your rental price. So you're saying that if everything is going up, then I must put up my price too. And that, as Ms. Williams says, becomes a self-fulfilling prophecy. And the objective of the Bank of Jamaica is to try to slow that down, to try to take some of the wind from beneath the sail of expectations, so that somebody's not trying to price foreign currency the next time they buy it at 170. It is currently about 155. If they think it's going to be 170 and they price it at that now to be replaced, there goes expectations, there goes inflation. So that we are trying to fight the battle against inflation through expectations and on the front of exchange rate, as well as trying to take some of the, you may not like to hear this, Minister, take some of the purchasing power out of the economy to kind of slow it down a bit so that it doesn't put pressure on prices. Now, that doesn't mean that we are harming growth excessively, because we expect a lot of growth in the Jamaican economy to come from external sectors, through tourism in particular. And so our Bank of Jamaica rate has no impact on tourism and on the resurgence of tourism in the economy. But it will dampen down generally domestic demand in the economy. I don't know if the Senior Deputy Governor wants to add anything.
Thanks, Governor. I'll probably just address the specific question in relation to the transitory nature of these shocks. Well, first of all, I'd say one of the biggest questions now for central bankers around the world is how transitory will these transitory shocks be? And in fact, the growing consensus is that the impact of these shocks are going to actually be longer than we had originally thought. I mean, indeed, we have seen some reversion in some of the prices, but they still remain high. And there's a concern that, you know, with the continuation of COVID, with new variants, the supply chain conditions will be extended. But even beyond that, whilst these shocks may indeed come off, if the second round factors that the governor mentioned, the fact that somebody is going to try to protect themselves by increasing their own rental rates, or somebody who is selling coconuts on the sidewalk, because he has to pay more for flour in the supermarket, he's going to be then raising the price of coconuts. If these second round effects become entrenched, then what you'll find is that even after inflation, the transitory shocks has died out, you have a dynamics that is building on its own. And this is what we have to try to head off. As Kerry noted earlier, monetary policy takes time to work through the economy. And because of that, we can't wait until things die down. We have to actually be proactive and preemptive, so that by the time these things would come to fruition, would have the actions, the monetary policy actions would have begun to affect the economy.
Member Robinson.
Right. Well, the risk, if we don't do this, is that we go back into a situation where high inflation becomes endemic. We go back to the days where inflation were 8, 9, 10, 15%. So that is the risk that we're trying to head off. Now, if you think about an environment like that, you're looking at an environment where there's this heightened uncertainty. Businesses will have to then think twice about how they're going to invest. Even if central bank does nothing, in that environment of higher inflation, market rates will rise by themselves. So in the long run, what you find happening is that we end up with higher inflation and actually weaker economic activity. So it is best for us to maybe take a little sacrifice now so that we can secure longer-term growth and low inflation.
Thank you, Governor and team, for being here. I want to just ask some questions around the imported nature of the inflation, and if you could indicate of the inflation that we experience, what percentage of that would you attribute to external factors outside of Jamaica versus, for example, increases in agricultural prices, which are domestic? Secondly, what impact does depreciation of the currency have on the inflation rate? So if, for example, you have a 1% depreciation, what is the corresponding impact on the inflation rate? And then related to the foreign exchange market, because that certainly is a big factor in influencing expectations, if you could indicate what is the bank's approach to intervening. My observation is that it tends to be incremental. You'd come in, you'll do 20 million a day for a week to try and stabilize the market versus doing 100 a day to send a signal to the market that you are coming in, you're going to kill the speculators, and you're going to indicate that the rate should be at a particular point. So if you could explain the guiding philosophy in terms of what determines that level of intervention.
Thank you. Let me start with the foreign exchange rate situation, and I'll ask Wayne to speak some more on the other issues. So the exchange rate in Jamaica is market-driven, and there is no way, despite having the reserves that we do have, that we could set an arbitrary rate and hold it. It just doesn't work. It's like swimming against the tide. There is a certain market-driven momentum that exists. What we try to do is look at where the market is acting irrationally on the occasions that it does, and then we intervene. Sometimes we intervene at 30 million. Sometimes we intervene at 30 million 3-4 days in a row. So it depends on how we assess the irrationality in the market. But we're not there to set a rate and to hold it, because that's not possible in a market-driven economy.
Just to be clear, I wasn't suggesting that you do. It's just the nature of the intervention and the signal that you want to send.
Yes, and I think we have been effective. As you will see, the rate has been up and down over the several years, and in large measure that has to do with the demand and supply, much of which we have an influence on. So I think we can take some credit for seeing the price on average being fairly stable. Remember the days when it went only one way. Nowadays, it's been going both ways.
Paul Well?
Right. Okay, thanks, Governor. In terms of the impact on imported inflation, I mean, as Ms. Williams has shown, our estimate for the inflation is that October shows that about 18% of that 8.5% was directly related to international commodity price shocks. 18%. And this is 18% of that. But these are just direct effects. You may have some second-round effects happening and some lag effects happening as well. In terms of the question on the exchange rate impact, which is a very good question, I mean, this is something we actually study very carefully, very closely, and very regularly. And what we have found is that the rate at which exchange rate movement affects prices is itself also a function at the pace at which the exchange rate is moving. So our research, and we'll be publishing this shortly, have found that when the exchange rate is, say, moving at about, say, 7% per year or above, what you find is that for every 1% movement in the exchange rate, prices will probably move somewhere about 0.7 percentage points, or inflation by about 0.7 percentage points. When the exchange rate is moving much slower than that, that's below the 7%, say 4 or 5%, then the pass-through is actually very low. somewhere between 40.4 percentage points of inflation for every 1%. The key point, though, is that when we look at our history, the impact of exchange rate on inflation has actually declined significantly. In the mid to late 90s, early 2000, a 1% movement in the exchange rate will result in almost 1% inflation rate, almost a one-to-one movement. We are not seeing that anymore.
Member Paul.
Yes, Chairman, I'm going to shift away from this discussion about inflation and exchange rate, just to try to understand.
You might have been late. We're asking for questions because time is limited. We're not doing speeches today here, so we're asking. No, I'm just preempting you, just because you said no offense at all. Just go into questions.
Governor, I'm trying to understand the role and function now of the Bank of Jamaica. It does appear as if you and the minister are strangers today, as we are. And I'm just trying to understand, in terms of how you interface now with the government, how affected is that function? Do you have to brief the minister as you used to? Do you have to brief the cabinet as you are wont to under the former regime? So I'd like for you to explain that. And because everything is everything, so you have monetary policy and you have fiscal policy. Do you play any role at all on that side? And how is that affected? And finally, functionally. And finally, we were talking about inflation. There is a description of a basket. Do you influence that, and how do you influence that? And finally, the question, the exchange rate. Because for me, there is nothing as impactful on the expectation element than seeing the exchange rate moving. I'm in the business of practicing law these days. And I tell my clients, when they're purchasing real estate, especially when they're purchasing in foreign exchange, to wait for a certain period of the time, the quarter. And we've been plotting it, that you see the escalation, you see stability up towards the end of a quarter, then you see the movement of the exchange rate. And as you know, for you to calculate stamp duty and transfer tax when you're purchasing foreign exchange, you have to provide a rate of exchange to the stamp office. And it sends for me a unnecessary, unstable situation in the economy. And that, I think, fuels a lot more of the expectations. What is your position on a fixed exchange rate?
Well, first of all, let me start with the relationship with the Ministry of Finance. The minister sets the inflation corridor for us, 4 to 6%. He does it, of course, in consultation. We provide some technical information. And then he leaves us to manage that. So the rate increases that we have done have all come from meetings of the Monetary Policy Committee, which is a committee made up of internal BOJ people and 2 independent economists outside of the Bank of Jamaica. The minister hears about it after that deliberation and decision has been made. Every quarter, we advise the minister of what is happening. And periodically, the cabinet will invite the Bank of Jamaica to speak to them about the state of the economy and when it's time to prepare the budget and stuff like that. So we do have a relationship which tends to be more quarterly than any more regular than that. We have no effect at all or control over authority on the fiscal side. That is totally managed by the Ministry of Finance. And there's a very strict law built into the Bank of Jamaica Amendment Act by all of you lawmakers that prohibits us from granting credit to the government and to the ministry. So there's a very hard and fast line between us and the fiscal side of the economy. The foreign exchange volatility, just to say that we noticed that too. And last month we took a decision which became effective the 6th of December, I believe, to reduce the net open positions. So this is a technique we have where the DTIs, net open positions, it's a technique where the commercial banks, DTIs, can either go long withholding foreign exchange or go short, that is sell foreign currency they don't currently have but which they expect to have in the future. And what we did was close down that corridor to prevent the volatility from being so high. And so we are watching it now as we approach the end of another quarter to see whether the volatility becomes contained in a more reasonable corridor. Wayne, maybe I could ask you to speak about the basket and any other matter I missed.
Right, sure. On the basket, well, the basket is actually constructed. Right. Yeah, the basket is actually constructed and compiled by the Statistical Institute of Jamaica. Every 10 to 15 years, they actually do a survey of all the households in Jamaica and ask them about their income and their expenditure patterns on all the goods. And this determines what goods goes into this basket and the weight or the influence each particular good goes into the basket. So that's purely exercised by the Statistical Institute of Jamaica. Bank of Jamaica, nor the government, nor the Ministry of Finance is involved in that. It's independently done. And every month, they go around the country, in every nook and cranny, and they actually measure these prices, and then they compile it, and it's aggregated into this index called the Consumer Price Index. Our job is really to monitor the change in that index and to manage the movements in that index.
Chairman, my turn? No, my turn?
No, the next person who caught my eye was Member Chuck.
Yeah. I have a very simple question. In your presentation on inflation, you didn't put as one of your category money supply. Now, I want to ask it, comparing two periods, in the 90s, a 10-year period approximately in the 90s and maybe over the last 10 years. In the 90s, there was an excess supply, money supply, perhaps because the government was spending more than it was collecting and therefore having to borrow from BOJ and increase the debt enormously so that inflation went to 100% and more. Over the last 10 years, however, I don't think there has been any borrowing from BOJ. In fact, in paying back the debt, we have a 6% surplus, so that money is coming out of the economy. As the question is, just if you relax, you'll get the question. So the issue is, Governor, if you're taking money out over the last 10 years to the tune of about 6% of the the fiscal budget every year, why is that not causing inflation to be closer to 0%? Because bear in mind, if you look at in the 90s, money supply was increasing, which caused the debt and also inflation to rise.
Member Chuck, we're going straight to the question.
And the question is, how do you explain the fiscal position in the 10 years of the 90s and the last 10 years, where in the last 10 years, the fiscal position is to take money out of the economy, as against the 90s. So you should see inflation closer to 0%.
Right. Well, prior to this COVID era, I mean, we had a period of low inflation. for quite a while. We've even had inflation dropping below 3% at one point. Now, a part of that low inflation environment was because of the fiscal consolidation. Now, with that fiscal consolidation, it then allowed Bank of Jamaica to be less restrictive. And so that is why we were able to have a very accommodative monetary policy, as the chart showed, where we have been consistently reducing interest rates down to the historic low of 0.5. And that is primarily because of the anchor that was provided by the fiscal consolidation.
All right. So we had said an hour. I'm asking you to keep your questions short and tight. There are a number of people who have put up their hand. Dr. Dunn, tight. After that, Robert Miller, Member Jackson, Member Morrison. In that order, and then we take it.
Thank you very much.
I have your name down, leader, but it came after these persons.
Thank you very much. Governor, the BOJ has done a great job in promoting low, stable, and predictable inflation, and has become a model that other countries have looked at in the way how you have communicated that information to the general population. With expectation now as the greatest threat to inflation, is there a corresponding campaign that you will also launch to look at educating the Jamaican population about the negative effects of expected inflation, and by doing so to help to temper conditions such as increase in wages and increase in general purchasing power? That's one. The second question is, you'll be using a number of forecasting tools to look at the inflation. The tool that you're using, is it robust enough? And the outcome of the inflation that we now have, would you say that, considering that it takes 4 to 5 quarters for the pass-through effect of any policies to happen, would you say that we're actually late in adjusting for the expected inflation? And the third question is, with almost $5 billion in reserves, why isn't the BOJ intervening much more into the market to deal with the fluctuation in the foreign exchange? Thank you.
Yeah. Can I start with the last part? Because that seems to be a very prevalent question. We have set an amount of reserves that we're trying to preserve. We have agreed on a standard to measure what is considered to be conservative and prudent reserves that a country like Jamaica should hold. And we're holding it because we are a small open economy and anything can happen. We can get shocks, whether it is hurricanes or it is oil prices, whatever, that can jerk our reserves very substantially at short notice. And so we have a pretty conservative level that we try to hold reserves at. And that is a technique that we have agreed with the IMF how to measure. And so we're careful in how we spend those reserves. We're looking to, it's almost like a rifle we're trying to shoot. Where we see disorder, we make a shot. But it's not an automatic weapon that is going to fire off 100 rounds per minute because we just don't have the capacity of reserves to be able to do that. Wayne?
Okay, thanks. With regard to your question on our monetary policy tools, I think we should emphasize that we're not just relying on one policy lever, the policy interest rate, but the MPC has decided to implement really a package of measures. So in addition to the signal that we provide by adjusting our policy rate, we're also, you'd notice, we have been very proactive in trying to manage the exchange rate. In fact, for the fiscal year to date, we have sold about over $600 million for the fiscal year to date into the foreign exchange market. In October and November alone, we sold directly almost over 100, roughly. And so this is both in terms of direct sales into the market and direct sales also to the energy sector. I mean, a lot of persons who most likely will see when we intervene in the market, but they tend not to see when we actually sell directly to the energy sector. So we have been very proactive in trying to manage the exchange rate to limit the volatility. The other instrument that we've been looking at and we've been using as well is to try to manage the amount of Jamaica dollar liquidity that is in the financial system. So every week we are in the financial markets conducting open market operations where we try to manage the liquidity to ensure that it doesn't grow in a significant way that would threaten our target. In terms of communication, well, we see communication as probably one of the most important tools of monetary policy. And members will be aware of the campaign that we have had over the past couple of years, which was more broad scale, more wide scale. We have actually tried to tactically shift the focus of our campaign to be a little bit more direct, to try to explain things in more concrete and in terms that people can actually relate to. And we've also tried to actually target key stakeholders in our communication. So we've been having direct contact, direct interface, for example, with the private sector organization of Jamaica. We have been having direct interface with members of the media. And we plan to also do similar interface with the unions as well. So it's a combination of things, it's a package of initiatives that we are rolling out.
Member Miller.
Thank you. I'd like to ask some brief questions in terms of, I'd like to shift a little bit in terms of the BOJ role in regulating good customer service and access to the public. You might be aware that in terms of the banking system, you know, they have long lines and persons are in the sun for hours to get service. Licensed banks are able to close their doors to the public, and some become cashless overnight, you know, with no notice to the public. You know, ATM, in my view, is not properly maintained, and the per capita to really distribute to the public is not there. What is the BOJ doing about this in ensuring that the license do not only focus on capital ratio, but also on the service to the public? Two, the BOJ and the informal economy, is it a reason why majority of these informal economy is not regulated because of the strenuous, you know, paperwork to open an account? You know, that must be regulated, you know, by the BOJ in terms of how companies and individuals open bank account, especially if there are existing members. And the last thing that I'd like to touch is the BOJ and the depreciation of the dollar. You know, there's a massive impact on the poor and the pensioner, in my point of view. There's a trend in terms of which the dollar is being revalued at particular period, mainly around the accounting periods, in my view, and also the depreciation of the currency after the end of the accounting period. Is this manipulation of the currency market by traders? You know, our reserve is very strong. What are we doing about this? And what new policies are you pursuing to regulate internal trading more deeply? And I would like to ask a last question.
Member, there are some other members that want to ask a question. I'm going to ask you to hold that, just to allow other members.
Madam Speaker, recently I've received a lot of complaints about the bank service, and I have had occasion to meet with the CEOs of each of these institutions. I have no doubt that what has been related is true, and I've even got evidence of persons speaking about the bank service, consumers that is. The fact though is that the banks are struggling in a period just like us against COVID and all of those measures. And as you can imagine, you know, life changed dramatically for them and their interface with customers once COVID started. And they have tried, some more successfully than others, to adapt. their online banking transactions has grown tremendously. And in any community in Jamaica, you'll find that more and more people are using that means. Otherwise, the crisis would be even worse than it is. So I have tried to impress on them on every occasion I've had that it is important for them to, as CEOs, to pay attention to what is happening at the micro level in their organizations. The complaints coming out of whether it is Port Maria or Castleton Gardens, wherever it is. And they have told me that on every occasion that they have heard of complaints that they investigated and that they're doing their best. I would only suggest that rather than use me as an intermediary, it might be useful if you ask the Jamaica Bankers Association to come to see you and for you to put some of those experiences to them and hear what their response is. Consumer protection. No, Bank of Jamaica doesn't have a lot of authority and power when it comes to consumer protection in the banking sector. That is going to require a kind of specialized law that will allow our agency, whether it's within the Bank of Jamaica or not, to really prosecute issues such as these and follow them up. We just don't have the power and the capacity to do it, which is a shame, I agree. The KYC, Wade?
Right. In terms of informality and getting more persons in the banking system, that has been a concern. That has been a concern of us. Okay. Right. That has been a concern for us and the government. In fact, in November 2019, I think it was, the House passed amendments to the poker legislation, which allowed for what we call simplified bank accounts. So it allowed for banks, based on assessment of risk, to vary the amount of information that they require of clients. So that has been in place since 2019. And so we are seeing some usage of that account. And we'll continue to monitor that, and hopefully we'll continue to see growth in those accounts. When the bank early next year rolls out our central bank digital currency, that will also facilitate persons entering into the formal banking system, because that will require just a simple wallet, which is a very simple account. So they will not need all the sort of information and the sort of references. So that will enable more persons to become a part of the formal system as well. You had asked about the exchange rate volatility. As the governor had mentioned earlier this month, 6th of December to be precise, we have actually adjusted some of the limits for which banks can actually change their positions in the foreign exchange market. That is, the limits through which they can actually hold foreign assets or run down their foreign assets. In any market, you will have dealers that they will buy more and hold, or they will sell down. And this sort of buying and selling will cause swings in the exchange rate, or in any price for that matter. So what we've tried to do, we have sort of reduced that room a bit without impairing their ability to actually function as market intermediaries. So we are actually watching that. This is the extent to which it assists in moderating some of the volatility.
Member Morrison, Member Hilton, and the Leader of the Opposition in that order.
Thank you very much, Madam.
Member Jackson I actually put Member Jackson after you. His hand went up before, but in deference to you. Well then, Member Morrison, Member Hilton, Member Jackson, and then the Leader of the Opposition.
Thank you, Madam Chair, and I'll be the shortest. Given the ravages of the COVID-19 pandemic on the world, I think that it is very commendable that we are at a place where, despite the challenges, we can say that we are cautiously optimistic that we will recover. Now, these statistics, they don't You know, they are not just confined to paper, but they actually reflect how the lives of the ordinary Jamaicans will be impacted. Now, I am asking a question on behalf of the ordinary Jamaican who is watching. Governor, you mentioned earlier that you seek to protect the interest of all Jamaicans, not just a particular group. Now, given the unpredictable international climate, and very basic, the supply chain demand and what comes out of that, because of this impact of COVID, I want you to tell us in a very simple, strong umbrella comment, like a summary, to what extent are we fortified to absorb any shock, given any new strain on the economy, especially for those people, targeted to those people among us who are most vulnerable? Thank you.
Yes, that is a tough one. From a macroeconomic point of view, the economy remains stable, strong. The fiscal side has come back very well. Our reserves are ample. And so I think from that point of view, the economy is well positioned to economically weather that situation. What happens medically in our hospitals and what happens to the domestic economy under the pressure of stay-at-home measures, that is something that I couldn't comment on. I just hope, as I'm sure you do, that that doesn't happen. We are seeing a little light at the end of the tunnel, and we do want to continue down the path of a more opened up economy.
Governor, in the presentation made, there was the indication that you're looking at fine-tuning your policy tools, particularly as it relates to consumer expectation and labor market expectation. Do you believe that you have the tools now to manage the extraordinary situation, which is the COVID trough, the trough in the economic downturn caused by COVID, and what we are seeing as really normal policy responses to what we believe is a counter-cyclical situation?
Yeah, I think that unlike, say, the United States, where the transmission system between when the Fed makes a decision and what the impact is in the economy, for us it is a little less precise, takes a little longer, it is a blunter instrument, and that is so for a number of reasons. We have quite an asymmetrical banking sector, meaning a couple of big banks and then proliferation of small banks. We have informality in our economy too, which means a lot of people don't rely directly on the credit channel of the banks. So the transmission is less than perfect, but we work with the tools that we have at our disposal. And I think that we're learning lessons as we go along as to how to fine-tune, what to adjust, not just focus on one tool of interest rates, but also exchange rate, money supply. And there are other tools that we can use too, which we haven't touched as yet. Banks keep reserves at the BOJ. Do we pay for some, don't pay for some? There are many other, not many other, but a few other tools that we can deploy. So I would say that as we go along, we're open-minded and we're being sensitive to the adjustments that we have to make and constantly trying to measure out there, are we having an effect or not? I would say that I would like to see us have a bigger effect, but we have to be measured also. If we said back in October, let's move interest rates 4%, one go, that would cause eruption, but it would certainly slam the brakes on, and every construction site would say, do I continue? Every businessman would say, should I invest? the economy would certainly feel the effect of monetary policy. But that would be disruptive. What we're trying to do is to send smaller signals to say, we're not happy with inflation, we need to restrain it, be careful on your price setting, so the 1%, the 0.5%, 0.5%, so that is what our strategy is. And we learn as we go along and try to be more effective.
And then the leader of the opposition, after which I'm going to have Member Williams and Member Henry to close off. We're going to have Member Jackson, the leader of the opposition, Member Favour Williams, and Member Mike Henry to close off.
Thank you, Madam Chair. But let me preface my comment to say, Madam.
Can I say we're winding down at the time? I asked at the beginning, not for speeches. We're just going to the question.
No, it is in that context I want to preface my comment. Madam Speaker, this is the first opportunity, and it is infrequent, that the Bank of Jamaica will be able to come before the full House. And therefore, I think with all due respect, substantial time should be allotted, even if we are here until midnight, to allow the members.
Well, can I just stop you? I must respond, because first of all, the governor was here with his team from 1 o'clock, which was the time. We were all put on notice last week. This meeting was taking place, and he waited for half an hour for some of us to come in, and for an hour. And the point was made by the leader of the opposition. It was well taken in. It's in handshake, and we have given a commitment. So, because you were so late, Member Jackson, you didn't go through all of that. So let's go on with the question.
Yes, ma'am, and I will also say I was late to allow others to ask before me. Anyway, I know that the governor will not mind staying an extra time. My questions, Madam Speaker. Governor, the question of dual currency. Over recent years, a lot of transactions in Jamaica are being quoted, firstly, in foreign currency, mainly U.S. currency, and thereafter the equivalency is used. So the reference price is no longer the U.S. currency. I mean, the Jamaican currency, but the foreign currency, and predominantly U.S. dollars. I would love to get your comment on that. That's question one. But the second part of that question is that the fact that many services, some medical, some dental, which have not a great deal of foreign currency component, are also being quoted in U.S. dollars and not in the local currency. Following up on a question asked by my colleague from Southeast St. Catherine about the banking services. Suffice it to say, 3 years ago, this House was promised that consequent to the new Banking Services Act that was promulgated in 2014, that a consumer protection facility would be in place, either directly or collaboratively with the Bank of Jamaica to protect consumer interests. 3 years since the new act has been promulgated in 2014, as was acknowledged by you, that is yet to come in place. Now, one of the major problems facing many Jamaicans, many deposit holders, is being able to transfer across banks. We have in telecom, for example, legislation that allows the transferability across telecom carriers. Many Jamaicans get frustrated because they don't want to go through the tedious exercise of reproducing documentation in a new bank or in a different bank to open an account. The question in that regard, Governor, why does it seem so difficult, if not impossible, for the Bank of Jamaica to establish a core set of customer information critical to opening an account where they can transfer to another bank upon the request of the customer? So if they have bank A and they want to go to Bank B, within 3 working days or what have you, that body of base information can go across and the customer opens the account in that bank. The significance of that, Governor, is that the normal person feel that they're handcuffed to the inferior service being provided by the bank that they're with. And so I believe it will allow for greater competition between the banks, result in better service provision if the Bank of Jamaica was to play a facilitator role in causing that to happen. Third question. As the Bank of Jamaica examine, I know you have a very strong legal department, as the Bank of Jamaica examine the provisions of the Bill of Exchange Act in respect to the fees being charged by commercial banks for encashing checks drawn on the very same bank. So Bank A issues, you have a checking account in Bank A, and you go to encash a check at any one of their branch, you have to pay a fee to get the money out of their own account. Information I have is that that's a violation of the existing exchange, Bill of Exchange Act that is in place. In that regard, Governor, it is imperative that in the absence of any consumer protection entity for banking customers, that the Bank of Jamaica plays a more assertive, protective role for the banking public. Fourth question.
Well, I was limiting everybody to just a few because your leader is there, there are other people, and
he said he doesn't mind.
But we have to break for lunch, you know, we've had no break.
Sure,
so
this is the last one.
I really ask you to go to the fourth question directly without.
No, without elaboration. The banking fees, Governor, that are being charged to customers to make deposits on their own account. The fees being charged by the banks to make withdrawal from their own accounts, not to borrow the bank's money, not to use the bank's money, but to use their own monies.
What is the question? Member, I'm allowing you 4 questions, and I really need you to go to the question.
No, I'm closing
Your
it now.
leader has not spoken, and there are 2 other persons, and it is now 57, and you are the last person to get in here.
Okay, the question is the Bank of Jamaica prepared to play any role in protecting the depositors from those fees to make withdrawals from their accounts?
Member Jackson, I feel that you were in our monetary policy committee meeting last week, you know. The Minister of Finance prohibited me from. But the way you spoke, I got the impression, because the exact thing that you mentioned of a kind of central depository system for customer information is what we discussed. And we're exploring which countries have done this in order for us to look at the practicality of it. Because I agree 100% that if with, I don't know what NIDS is called, coming forward, the new national identity system, with that and a central depository of know your customer information, we can make bank competition much better. So 100% in agreement with you on that. The tricky question you asked is about people pricing property or assets in US dollars. I think that is a reflection of 2 things. One is an economy that is pretty robust, where people feel that they can put forward prices that are in US dollars. Secondly, a system of US dollars being available that actually works. The fact that we can actually go to the bank, even in the times of COVID, and get foreign currency does say something about the system that we have and the confidence that has been put in it. So the supply is still strong even during COVID. And so I think people pricing in US is a signal too that they feel that the system works. It's also a signal, I think, that the economy is pretty robust. But thirdly, I think it is a signal that expectations is playing a part in pricing. And so people are being defensive and saying, I'm going to set my price so that I am secure against inflation going forward. And this is a very kind of mindset that we are trying to work against. The bills of exchange, I don't know. I would certainly ask the bill of exchange is called. I would inquire about that to see if it is the practice of the banks is legal or not.
Of the opposition.
Thank you, Madam Speaker. Governor and team, thank you for coming and answering our questions and so on. I have two questions for you. First of all, this reversal of the trend of monetary policy and the movement towards increasing domestic interest rates is taking place within a context where the economy shrunk very dramatically and sharply with the COVID pandemic's onset, close to 12% negative growth in real terms. It has not yet recovered that lost ground. Some recovery has taken place, but we have not yet reached back to the point of output in real terms where we were before COVID hit. So it is a kind of pro-cyclical policy to be raising interest rates and trying to compress demand at a time when one would have expected that one would want to see demand grow and increase demand to drive economic growth and to take us back to a position of a stronger economy. So, and this would really never have happened, I think, were it not for the Bank of Jamaica amendments making price stability the primary focus of the Bank of Jamaica. I am concerned about it because it's not clear to me what impact it will have in terms of on the prospects for growth if we have interest rates trending upwards. And although you say correctly that we still have negative real interest rates in terms of the BOJ policy rate, that really is a signal and is really paid on bank deposits with you. But in terms of interest rates in the wider economy, they're largely positive in terms of, they're way ahead of inflation. And what impact we're having on that and demand for credit and so on. We're playing a dangerous game, in a sense, by going down this route. And I agree that inflation itself is dangerous and no doubt is considered to be more dangerous. But I'm just, you said that you're doing it in a way that would try and reduce or mitigate as much as possible the impact on growth, the negative impact on growth of the tightening, of the general compression of demand result that you're seeking to achieve. I would like to hear more as to why, in what way you think that is being done. Because, it's kind of, on the face of it, just the mere trend of having two successive increases in interest rates, suggesting a determination to get inflation under control using that mechanism would seem to be something that would be inimical to the increased credit, demand for credit and expansion. So I'm interested to see in what way you think doing this can be managed in a way that doesn't have that impact on growth. The other question I had really is to do with the Jamaican dollar as a store of value. Currency is a unit of account for measuring transactions. It is another role that it has is a medium of exchange to allow transactions to flow seamlessly, and the third is as a store of value. The Jamaican dollar has been a singularly poor store of value over many, many years, because although we do have some recoveries from time to time and movements both ways, the general trend line seems to have been constantly towards a weakening of our currency over time. And I wondered, what your views are in terms of how that can be arrested so that we can see exchange rate stability over the medium to long term as a reality in life. I think Member Paul Well's concern was about that, and how do we get there, or will we ever get there?
Thank you, Mr. Golin. Several questions. If I could just take my time and walk through them and ask Wayne to help me with some. To me, inflation is the worst enemy of Jamaicans. For a businessman, interest rates can go up today. They may go down tomorrow. For the Jamaican, inflation goes up. It's not coming down. He has to live with that inflation. That economic base has been eroded by inflation. So if inflation even went from 8 to 2, still he has to hug up that 8 and hug up the 2. So to me, defending the Jamaican population against inflation surpasses the secular interests of whether it's this business community, that business community, a mortgagee or whatever, or is it mortgagor? I'm not sure. Generally, the 3 million Jamaicans, every one of us, are affected in the same way by inflation. And so I take it almost, well, it's our mantra to fight against inflation, and I take it very seriously. When we look at the impact on growth, we have to be careful, and we dove into it and determined that moving rates would not seriously harm the recovery of the economy, because for the better part, recovery of the Jamaican economy sits on tourism. In other words, the domestic side of the economy has by and large picked up back. It's the external side to do with tourism that's left to complete that cycle. And domestic interest rates has very little to do with the tourism industry. So we felt pretty confident about that. Secondly, as I said before, we didn't move dramatically. There have been instances where we have dropped rates before my time, but I think by 200 basis points. We didn't say we're going to increase rates by 200 basis points. It was 100, and it was 50 and 50. So we're trying to be tempered by sending signals and hoping that the business community and other decision makers will take those signals into account when they are setting prices. The interest rates, Mr. Golin, are massively negative. When I have a savings account, for some companies they are. People borrow at 6%, right. So some businesses will borrow at rates that are 8 or sub 8. All of us get interest on our deposits at 3, 4, I don't know, which is massively negative. And to that extent, it is very supportive of growth still. In any event, I don't think so far what we have noticed is that only at the margin is interest rates being adjusted. So if the bank is going to make a new loan, they are pricing it given the increased BOJ policy rates. But by and large, for existing customers, rates have not yet moved.
Yes, thanks, Governor. And just a follow-on on the point about interest rates. Mortgage rates now are about 7%. So if you have inflation between 8 and 9%, that's still negative. And even for lending rates that are higher than that, what it means is that the room that you have in real terms is much more compressed. So any way you look at it, we're still in a very accommodative environment. But I think you raise a very important question, though, and which is really at the heart of what we're doing here in terms of the store of value of the Jamaican currency. The bottom line is, the fact of the matter is that why the Jamaican dollar has been losing its use as a store of value is precisely because of inflation. Jamaica has had a history of high inflation, that is notably above that of our trading partners. So if we want to actually restore purchasing power, we have to actually try and limit the movement in inflation. And as inflation comes back down and comes back closer to our trading partners, and as we diversify the economy, diversify our export sector, and as we deepen our financial markets, our foreign exchange markets, you then will begin to see a little bit more stability in the exchange rate. But the crux of the matter, the key to preserving the value of any currency is to limit inflation. So that's just the flip side.
Minister Williams and then Minister Henry to close off our question time.
Thank you, Madam Chair. Governor, I acknowledge that the Bank of Jamaica has been early in recognizing rising inflation, and I acknowledge as well that you've taken early action, early steps to try to head this off. As we look across the world, we're seeing some similar situations. In the U.S., 6.8% inflation, highest in 39 years, I think they say. Could you just put Jamaica in the global context for us? Because a lot of times it helps for us to have that comparison of what is going on in the rest of the world relative to what we're doing here in Jamaica. Yeah.
All right, thanks very much. Well, this is a global phenomenon, right across the world. You mentioned the U.S. The 6.1% in October is a historic high for them. They have been accustomed to very low inflation, 2% or less. And it's happening right across the world. In the UK, 5.1%. What we've actually been seeing because of this global phenomenon is that about 37 central banks right across the world have actually started to move rates. Some of them on multiple occasions. I think Brazil is about 7 times, if memory serves me correct, that they've actually adjusted rates. So Jamaica is not unique. They realize that they have to be proactive, notwithstanding the fact that their own economies, many of those economies, they're also recovering, they're also struggling with COVID. But the IMF actually just used a warn the Bank of England about this, what they call inactivity bias, that if you wait too late, the problem will become so entrenched that in order to correct it, the cost to growth will be even much greater.
My question really relates to more to policy, and to be clear. My understanding that going forward, government is still going to be responsible for policy. If I am hearing correctly, and I want to be quite clear as I have a concern, did I hear and read right that policy changes do not reflect themselves until 5 quarters? So it means a 1-year budget could be different and the policy could be taking that long to be implemented? And if so, and that is so, then what role is forecasting going to play, and those figures that we rely on to be able for the government to make proper plans, to be able to protect those who are less fortunate, specifically in the marketplace?
Thank you, Mr. Henry. I think what we meant is that the maximum impact of our policy will take a while because we don't have the perfect transmission system and it has to work its way through. But it doesn't mean that as we do make adjustments that it doesn't have some impact. It just doesn't have the maximum impact at that time. Also, as I was just saying, rather than move dramatically in one step, we are trying to move incrementally. It's like just trying to walk carefully through a store rather than running and hitting down stuff as we go along, just to take our time and make sure that we are doing the right thing.
Buzz, I think that completes the question time. And what we have before us now is the report. Is it the wish of committee members that the report be signed by me as chairman of this meeting? Is it the wish? Those in favor, those against? Is it the wish? Is it the wish of us all as members of the whole house that the report be signed? I'm not hearing from those on my left. Are we? You're looking at it. Very well. Please look at it because it is a report of the whole House, and I would like to have consensus on that.
Madam Chair, could I just say in the meanwhile, what a pleasure it was to appear here. And it really does need a lot more discussion, and we're more than happy to do so in the future.
Thank you so much, Governor. Thank you and your team for being here. And I think that, as you said, there's so much that can be discussed at our members, and it was expressed at the very beginning that more time be allotted, and that when the time is allotted, all our members who are interested endeavor to be here on time.
Madam Chair?
No more questions?
No questions.
So I'm just allowing member for the opposition to look to see if I have the consensus of all of us as members of the House. And we do. I see the members. So members, I will go ahead and sign the report since it is a wish of us all. Again, thank you very much to the Governor and his team for being here with us this afternoon. Members, it is now 3:15, and members of the House and members who have sat in committees from morning have been at it. I would like for us to have 20 minutes break for the members to grab something. So 20 minutes would take us to what time? 3:35 promptly. So I'm asking you to eat quickly, grab a bite, and we'll get back to Parliament. Thank you all very much.